Welcome everyone to this presentation. Today I'm going to be talking about a topic that not many may be looking into or even considering. And I really hope with the information that I'm going to be presenting today, many of you might have a different perspective as to, even though I have, let's say, a 9 to 5 where I have obligations, there are other ways and strategies that I can still engage the marketplace, but with a proper and efficient manner. So today's presentation is talking about trading with a 9 to 5 and the strategies for success. Alrighty, so the first thing is a mental note. Really what we need to understand is that this is something that won't be done overnight or even within the next week or even month. This is an engagement that will take time to build, patience, perseverance. And not many of you may not be willing to do that. So it's crucial that we understand to make sure that we have the perspective in place before going ahead. So number one is understanding that this is a marathon, not a sprint. It's going to take time. And remember that success comes with sacrifice. So understandably, many of you might have kids or other obligations that you have to meet. Maybe you have to go to the gym, cook, all these different things. But if you can properly and efficiently scale a plan that can work around that can maybe even be flexible, you can accomplish really any goals that you have set forth. And don't force it. Many times people that trade, that are trading during the with a 9 to 5, they're trying to over leverage, you know, risking practically all their account, and or even wake up at times where they know they're not going to have those higher success rates, or even trading when they had a bad work day. It's best to stay out of the market because you're allowing your emotions to really guide you in the market rather than letting your mind, that rational aspect. So really take this with a grain of salt and look at this from a bigger point of view and understand that this is something that won't be completed super fast right away. I'm going to have a multi-million. No, it's something that takes time to build that foundation up like a house. So be patient, and that's why it was important that I first gave you all this mental note before heading forth. And next, we're going to be talking about time, your time region. So I put up this chart for you. This is the Forex time zone converter. I have the website right above. You can visit, and the times shown above are in New York time or Eastern Standard Time for New York. Obviously, you can change this to wherever you live in the world, and by utilizing this tool, you can see, okay, let's say for example you are in New York and you work from 8 to 5 p.m. If you work from 8 to 5 p.m., what you need to figure out is say, okay, what time am I most comfortable, or what time is best and most suitable for my current situation and my obligations. Some of you may have to trade London session, that 3 to 5 in the morning, trading session. You could by trading certain London exchanges or things of that nature. Then you also have Sydney and Tokyo, where let's say you get off of work, it's like 5:30 driving, you're home by 5:30 to 6. You can possibly engage within that Sydney session, and some of you maybe even find more comfortable within that Tokyo session. So really it's about, the reason why I'm putting this here so that you can understand, okay, I'm tied up between these times. What times can I engage within the marketplace with the time that I'm given? So there are opportunities. You just have to be willing and disciplined enough to know how and where you can engage and at what times. So here's the link above. You simply just have to go on your Google search bar, whichever search browser you use, and you're going to put that there in your time zone, and you're going to really figure out as to what time zone suits you best in particular to your trading style. But we're going to talk about that a little further later down. So here are some possible times of engagement. This is going to be in New York Standard Time. Like I said before, you could change this to whenever you want, or simply readjust it to your time zone. But for anyone trading that New York Standard Time, first we're going to talk about anyone that's working in a hybrid or remote environment. If you're hybrid or remote, your best chances will be during that pre-market New York session or the regular market New York session. And you have a plethora of, for all of them, you have future stocks and Forex. There's also other ones that you could trade, of course. You have crypto. But ideally, these three are going to be the best for your current situation. And if we really analyze this and look at that, you then also have the London session, but it's not really ideal because you'd have to wake up at around 2 to 3 in the morning and trade till 5. It is a little bit more aggressive. And then lastly, we have Asia session. Asia session is a little bit mixed because if you're able to be hybrid and remote and you have these chances within the morning time to trade, or some off time, you can still trade, before you work because obviously you're still home, or during your work session. But let's say you have a little off time, you can trade that. But trading during that Asian session, it's not really necessary. If you already made your, what you needed to make during these sessions, then there's no real point of trading that Asian session, from that 7 to 10 point in time. But of course, you can, if you didn't find anything here and you're off of work, you're still home, you can of course engage into that Asian or Sydney session. And then to those of us who are on site or in the office where you can be remote Monday through Friday, you still have three choices. You have the pre-market New York session, which is that 6 to 7 all the way up to that 8 or not before, just before the 9:30 opening bell. You then have London session again, same thing to that 2 3 in the morning. You're gonna have to wake up, and then you have your Asia session. So ideally, you probably want to be trading more during that Asian session. You can also do pre-market, just before work. If, for example, you can get into certain positions before going to work, you can also do that. But the reason why I put Asian session is because you get home. That way you're home, you shower, you eat, or you do what you need to do, and you have plenty of time because Asian session starts at around 8 o'clock. In terms of the real, your bigger movements, if you're trading Asian futures, things of that nature, they're going to be moving around those times. But of course, you still have stocks and forex and all these different things. But it's about making sure it fits your style to where you don't have so much mental pressure and you're able to engage properly and under control. So, like I said again, you can easily engage during the pre-market, buy shares or whatever you're doing. You also have options and things of that nature. But unfortunately, you won't be able to engage in options because you'll be working during that time. But you can easily engage in futures or forex. So, but Asian session most likely will be more suitable for you, depending on how you're trading it and which style you're trading it. Next, we're going to talk about risk tolerance and equity management. Many times we just go in trading right away and we don't, take some time to understand how much we have, how much we're willing to risk, and what are our goals. Not having any kind of goals or forecasts and even risk parameters will really deter your growth in your trading journey. So for example, I have here from my template sheet, from my trading template, and this is the forecasting section where you plan out your monthly equity and what you're looking to get as your monthly goal, how much you're willing to risk per trade to achieve that monthly goal, and then how much you need to make per week and per day. But of course, it depends. Many of you might not be trading per day. You just want to trade once per week, or, you might be holding, whatever it may be. But this is a guideline so that okay, let's say you made $80 for the day, or you made 400 for the week. Stop. You don't need to keep trading and causing any kind of issues or problems for yourself. So once you hit that threshold, just stop. Take a moment, note down and log and just tape read or adjust your strategy if need be, because this is what will allow you to go further. So it's being an equity manager, and not only just being an equity manager, but being one that's professional, one that thinks rationally and looks at it from a logistical and business point of view. So for example, let's say you have a monthly equity of 10,000 starting in August of 2024. You have a monthly goal of 16%. Now again, you can easily adjust this to whatever amount you want, and of course you can keep depositing. Instead of 16%, it could be even 6 or 7%, whichever one you want. And then from there, you set how much you're willing to risk based on your current situation. So really, this is a framework and a guideline that by utilizing this, you'll be able to get a well-rounded picture as to how you're going to be engaging the marketplace overall. And then you have some possible strategies of engagement. I won't be getting into anything too specific, as this will be really up to you. So the trader, you have to really figure out as to what trading style and what markets you really feel comfortable with. You don't want to be trading, let's say, for example, stocks in a certain aspect if you're very short term, because in futures, for example, might be better, or forex. But of course, it's your decision. You are the one that has to make that decision to really figure out as to what you're most comfortable with. So, for example, if it's stocks, options, and other, most likely if you're trading stocks or options and anything like that, that might be better for anyone either if you're mainly hybrid, because that way you're able to engage during those crucial market hours. But you also have pre-market. That's also a very good possibility you can get in, or even during lunch, you can also trade as well. There are plenty of options. It just depends on your how long you're willing to hold these trades. Are you a longer term trader, shorter term trader? So that's important. And for all three, of course, I have a plan of engagement and risk management. So of course, you need to know exactly, like I said before, how much are you willing to risk and what you need to gain to reach the success that you're looking for. And then, like I said before, with stocks, you can engage either before, during, or after market sessions. You have different options, but this would be more in line to that hybrid schedule, of course, depending on your current situation. With futures and forex, really you can engage in at any time, of course, because these markets are open at all times. So really, with futures and forex, it's more suited to those shorter term traders. Of course, you can definitely hold longer depending on your trading style. If you want to be a position trader, a monthly trader, whichever one. Just keep in mind you're going to need a lot of margin for that. So for anyone really working, during those on-site hours, futures and forex would be a lot better because you can either trade before you go to work or at the end when you get to work during that Asian session, like I said before. And what ties everything together is consistency and quality decision making. So by knowing, like I said before, knowing what you want, how much you're willing to risk, and having an engagement plan, a trading strategy and model that you're going to be engaging in, whichever one you choose. You could even do all three, of course, but I highly recommend staying with just one so you're not all over the place. It's about being grounded so that you can act, in with quality decision making, like I said here. So showing up every day, sacrificing what you know. For example, I know you might want to watch that Netflix or that YouTube. I get it. You're probably really tired and exhausted, but make some time, during the week. You don't have to be on the market every day, like I said. There just schedule time, depending on when it is. And by having that regimen, you're going to reach heights that you've never, thought that you could have. But it's about keeping a healthy mindset, showing up every day, and making the right decisions where you need to be. And in closing, I have a couple quotes to really, hone this in what I was really talking about. And the first one from Bill, we have: if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. And this goes back to what I was talking about previously, which is being patient. I understand that you want to get out of here, you want to get out of that job or wherever situation you're in, and you want to make the money, but understand that it's a process that compounds over time. You have to be patient and submit to the process, and that's what's going to allow you to grow as a trader. Not forcing it. Anything forced in life in general never goes the way you want. Let things you know form as they should be. Don't force it. And another quote we have is from Steve, and he says, do more of what works and less of what doesn't. And this goes back to that trading model that, if you have something that that, it has been working, maybe you need some tweaks here and there, but sit down with it and focus on just that one strategy. Don't go, social media and all these different things. Focus on what works and don't, if you know that, for example, let's say there's no earnings or there's no news or whatever, and you're looking for a certain particular volatility, don't engage in something that's going to have lower probability based on your trading model. It doesn't really make sense, right? So it's important to focus on what is working for you and less of what is not working for you. And lastly, I have another quote from Bill, and this one states that if a trader is motivated by the money, then it is the wrong reason. A truly successful trader has got to be involved and into the trading. The money is the side issue. The principal motivation is not the trappings of success. It's usually the byproduct. Simply stated, the game's the thing. So it goes back to the journey. Everyone, it's not the destination, it's the journey. So it's important that we understand that this money, in general, what you're, obtaining is a byproduct of discipline. Just like, for example, let's say someone who goes to the gym and they want to get a certain figure. When you understand that that person's mindset, that discipline, that consistency and quality of their actions, it's what's going to result in the figure that they're looking for or the certain health that they're looking for. But it all relates back onto that simple principle that you need that discipline, quality thinking, quality decision making. All these things will allow you to grow and develop as a trader. So I hope this lecture was insightful to all of you. Please feel free to send me any questions below in the comments section. Like and subscribe and share this with anyone that you hopefully find it useful for it. And I really appreciate your time watching this lecture, everyone. Thank you.